Alrighty, guys, welcome to our weekly Outlook webinar. Thank you guys so much for being here. Today is Sunday, September 24th, I believe. Thanks for being here. Shouldn't take too much time today, guys, maybe about 20, 30 minutes or so, maybe even a little bit shorter than that. Setups are pretty simple this week, at least for right now. If you guys are new here, I want to welcome you guys into the webinar. If it's your first time watching, my name is David Schinkel. I'm the CEO and founder of Positive Traders. I do this free weekly outlook. I try to do it every single Sunday for you guys, give you guys my outlook on the markets. If it's helpful for you guys, check out our website, check out our Facebook page. Website is positivetraders.us. But other than that, let's go ahead and get jumping right into things. I do want to make one quick announcement, guys. I know I never talk about the price or really the premium group. I just have you guys check it out on the website. But I do want to make this announcement for everybody that is interested in joining the premium group on October 1st. For the first time in a year, we are increasing our price. Our monthly price is going to be going from $69 a month to $89 a month if you do the monthly plan with our premium group. And if you are a lifetime member or you want to be a lifetime member, it's going up from $4.99 to $6.99 on October 1st. First time we've ever raised prices in over a year. So we're adding some training courses. We're doing some really big things. Things are really moving in the group. So yes, it's that. I just want to make that formal announcement. I know I've made that announcement in Telegram, all over social media a couple different times, but just so you guys hear it from me, that is what's going on. So let's go ahead and jump right into it. This week, as far as I'm not going to talk about too heavily about the economic events because there's a lot of them this week. Tomorrow we've got Governor Kuroda for the Bank of Japan speaking. We have Mario Draghi of the European Central Bank speaking tomorrow. Tuesday, we've got Janet Yellen speaking. So lots of heads of central banks are speaking this week. We also have some consumer confidence for the dollar on Tuesday. Lots of news for the dollar, the CAD, and for the dollar, CAD, and New Zealand dollar on Wednesday. Thursday, same thing. Bunch of news for the yen, the pound, the dollar. So it's a pretty spread out week, guys. A lot, not necessarily one key risk event that we're looking at. And then even Friday, we have Draghi speaking again, and then Governor Carney from the Bank of England speaking. So lots of heads of central banks speaking, lots of key risk events this week. There's not really one in particular. Next Friday is going to be FOMC as well. Or I'm sorry, not FOMC, NFP. So keep in mind next Friday is NFP. Let's jump right into the technicals, guys. I'm going to be going through all of these pairs over to the right over here, and let's start with gold. All right, gold, I am recommending to stay on the sidelines with gold. I would not be surprised if we saw a pullback, a continuation of this pullback on gold. We have broken through the 1300 level, and it came back up, and it dropped down to about 1290, came back up to retest the 1300 level, and is continuing to drop. I've told you guys a few times that it's definitely good to every $50 on the charts have it marked off. That's a pretty strong psychological level of support and resistance that the market likes to react to. And overall, it looks like the dollar could continue to gain a little bit of strength throughout this week. It may not be ready to fall quite yet. I know that there are talks about, especially with FOMC last week, there are talks about a rate hike being more than a 50% chance of a rate hike before 2018, most likely coming in December. Long term, that should give a little bit of strength, some ground back to the dollar, but I wouldn't be surprised if we, medium term see the dollar weaken and long term see the dollar strengthen, but in short term see the dollar strengthen. So let's see what happens. But if we do see the dollar strengthen short term, we're going to see a continuation of gold. Our next support level is going to be found about at 1280. We have some technical support. It's also going to be a psychological level of support because it's a nice round number. Although it's not every $50, this is every $10, 1290, 1280. It's still a significant level, and we are in a small downtrend. We are staging a small reversal. And looking at last week's weekly candle, we had that bearish engulfing candle at the 1250 level 2 weeks ago, then last week, and still a very nice bearish candle. This week, we could see the bears continue to take control down to the 1280 level or lower. So be watching for some possible downside on gold. Looking at the dollar index. Oh, good to see 50 people in here, guys. Thank you so much for coming. Dollar index, we can see, I've had pretty much a bearish outlook on the dollar ever since I've talked about this. If you guys have been watching my weekly outlooks for a couple weeks now, I have been bearish on the dollar ever since we broke the 93.2 level, which is multi-year support for the dollar index. And I have been expecting downside on the dollar for the past couple weeks. except for last week and the week before last. We were expecting a pullback around this area, which is exactly what we saw if you guys watched the webinar. And we are stalling. It seems like we may be potentially finding a bottom on the dollar index in this area. I wouldn't be surprised if we saw price action come back up and retest the 93.2 level. And at this area, it's going to tell us, is the dollar going to continue strengthening? Is it going to break back above that weekly, multi-year support, which would now be resistance, or is it going to bounce off of this area and continue going lower? But based on price action, and we can also see the daily candle close, we can see Friday's daily candle close on the dollar index. Pretty nice exhaustion candle showing, a quick presence of buyers in the markets. And we had some pretty nice blue candles last week showing the buyers kind of flexing a little bit in the market. So I wouldn't be surprised if we saw some strength in the dollar and some downside on gold. So let's see what happens this week. And of course, if you guys have been following me for a while, you guys know, or you just know the correlations in Forex, Euro USD does pretty much the exact opposite. It's like a mirror of the dollar index. So if we're potentially expecting a little bit of upside on the dollar index, some potential strengthening of the dollar, then that means we could see some weakening of the euro and some strengthening of the dollar, which we could see some potential downside on Euro USD. Now we have gapped. It is closing that gap quite quickly. I wouldn't be surprised. I'll kind of draw like a little idea, guys. I wouldn't be surprised if, and then look at that Friday candle too. That Friday daily candle is a pretty nice exhaustion candle right below this level, basically like the 119.50 level. I wouldn't be surprised if we saw this gap kind of come to close, maybe go a little bit higher than that, but right around like the 119.50 level, maybe see some sort of signs of reversal to come down to the 118.90, 118.80 level. So a nice, 60, 70, 80 pips that can be capitalized on. But what I'd ideally like to see, as far as confirmation to take this trade, is look for some signs of a bearish continuation pattern in this area. Maybe look for something like a evening star. Let's look for something like a bearish engulfing candle, maybe a bear flag on the 1 hour time frame. But overall, and I do want to one thing I want you guys to recognize is, let me zoom out for a second on the daily and show you guys this. On the daily, look at this trend line right here. This trend line broke last week. All right, so this trend line, this ascending trend line that's acted as support for quite some time, a few weeks now. We did break that 2 weeks ago, came up and retested it last week, the underside of that previous support, and then we've just kind of moved sideways since then. So I think there is some downside potential just because of the break of this trend line. And looking at the dollar index, it looks like the dollar index also actually has a trend line that broke too. So when we talk about them being the opposite, very, very similar, if you take this, kind of looks very similar. You can see that break 2 weeks ago, and then it kind of retested it last week, and then it's moving up, and it's just kind of been sideways the last couple of days of last week. So I wouldn't be surprised with the trend line breaks if we see the continuation of the break on both the dollar index and Euro USD. USD Swiss franc, this is actually a pretty good opportunity this week to get in a buy if we see this resistance broken. So some very clear, let me delete some of these zones so I'm not confusing you guys too much. Let me delete, I'll keep this for now. I'll keep that as well. I'll delete that for now. All right, so we have some resistance and support zones marked off. If we can break above this resistance zone, it's been multi-week resistance right here. All right, and also some support back here with the flag before it broke, then resistance, then resistance, then resistance again, and then dropped, and now we're coming right back up to that resistance. If we can get above this resistance and we get some sort of break or some sort of bullish continuation pattern, maybe a bull flag, maybe a retest of this zone, maybe expect price to pop up to this resistance trend line. And this trend line goes way back. This goes back until, well, not way back, but December of last year. You can see, so if we can extend this out a little bit. And we'll obviously look at other targets in this area. Let's see on the daily, you can kind of see this kind of whole zone where these 3 previous times found some support in this area. So somewhere around this zone, we may be looking for a target if that resistance is broken. You might also be able to throw a fib level in there and check out, hey, is this fib? We could do this major fib too. So kind of some confluence for the 50% level somewhere around this area. So we've got, this is a very nice confluence level and then we also have the 200 SMA, which I don't really look at the moving averages too much, but I just recognize that they're on the chart. So this zone is a good target for our buys if we see the 97.50 level. So I would definitely write that down on your trading journals, guys. If we can see a consistent break past or confirmed break through the 0.9750 level, what's that confirmation, guys, is we see a daily candle close above that level, we see a 4-hour candle close above that level, and we see some sort of bullish continuation pattern, whether that's a bull flag, whether that is a retest of the resistance, and then we have that pattern continue, or just some sort of price action on the market that tells us that it's not a fake out breaking through the resistance, it's continuing. So, and then targeting right around like the 98.50 level, or in between the 98.50 and the 99 level. So a nice 100 to 150 pip target if that resistance is broken. Nice thing also is if you guys trade correlations, it's very cool to look at the correlation between Euro USD and USD Swiss franc. If we do see, they have a negative correlation to each other. So if we do see this resistance on USD Swiss franc broken, there is a possibility that then that may be the catalyst for Euro USD to continue falling on a strengthening dollar. Pound dollar, pound yen, I'm just gonna skip right off of them, guys. Lots of consolidation. There was, as you guys know, two weeks ago, there was year-over-year CPI that was released for the pound that was very good, and then last week there was also decision rates for the pound with a lot of hawkish or positive outlook for the pound. So I'm just not interested in trading pound crosses, right? I'm gonna leave it at that, guys. We had this nice inverted head and shoulders that we talked about in both the weekly webinar a couple weeks ago and the premium group a couple times. But that's obviously a trade that is 1,000 pips low, or that's a formation that's 1,000 pips lower than where we are now. So I'm sitting on the sidelines with these pairs. I think there's a lot better risk reward on other pairs right now. So just skipping over the pound crosses for now. Dollar yen, USD Jappy. We have seen some pretty crazy moves on this pair. Let's put it on the weekly first, and let's kind of scale in a little bit, okay? On the weekly, kind of looks like the opposite of gold, and if you guys know the correlation between gold and dollar yen, we see the watch. We'll go back to gold real quick just to refresh your guys' memory. Remember, we talked about this at the beginning of this webinar. We talked about how 2 weeks ago there was this nice bearish engulfing candle, then another big bearish candle, and that could possibly open up the doors for, it's still a pretty bearish past 2 weekly candles, so that could open the door for another bearish week on gold, which, if you guys know your correlations, you should know that gold and dollar yen have a negative correlation to each other. So again, I also want to make a little disclaimer. 2 disclaimers is, one, if this is your guys' first time watching one of my weekly outlooks, make sure you guys understand that this is analysis based on the higher time frames. So don't be jumping into trades right after. If I say there could be potential upside on something or potential downside on something, don't just be jumping into a buy or sell without doing your own research, analysis, and confirmation first. This is just to assist you. It's just to assist you guys in in addition to your own analysis. But and the other disclaimer is regarding correlations. When I say that dollar yen has a negative correlation to gold, that does not mean 100% of the time. That doesn't mean that if gold goes up, dollar yen is for sure going to go down. Sometimes you'll see them both move the same direction. It's more than a 50% correlation to each other. So it means that more than half the time they have a negative correlation to each other. So it can help you with your analysis. So kind of like the opposite of gold, moving into the analysis on this, we do see this bullish engulfing candle 2 weeks ago, another decently bullish candle. So that could offer an opportunity to buy into this week, as well as with a strengthening dollar. Gives us some good conviction to the upside on this pair. But looking at this on the daily gives us some pretty clean price action as well. We can clearly see this well-defined wedge that formed from about March of 2016, and then we broke out of that wedge in August of this year. So definitely, that was actually March of this year. So about 6 months, 5-month consolidation wedge that we were in, and we finally broke to the downside, saw a retest, broke down, and we are now climbing back up. And if you notice, we are now back in this wedge. Now, this is an example where I want to show you guys that you don't want to judge a trade just based off of one candle necessarily. There are specific times you can. So I don't want to confuse you guys, but there are specific times you can take trades based on one candle, but You need to be at like an extreme highs or an extreme lows when you see things like a bullish or a bearish engulfing candle. So what I mean to say is we have this bearish engulfing candle right here, but if you look to the left on the charts, there's all this price action above this bearish engulfing candle. So I know a lot of people will instinctively like to sell this. They'll be like, oh, that was a bearish engulfing candle on the daily. Looks like it could be a good short. It could be a good short, but there's multiple or it could be a good short if this was up here, where you look to the left and there's not, it's new highs, okay, new multi-month highs or multi-year highs even. And then also, if you look at the wick on this daily candle, you look at the actual price action of the daily candle itself. If it's not a very strong bearish engulfing candle, if there's a big bottom wick, then that shows that there is a presence of buyers sometime within that day. So it doesn't necessarily show that the buyers are giving up yet. It shows that it doesn't show that the sellers are taking control yet. So very important that you really understand bearish engulfing candles. If you guys have read the book, The Naked Forex, they refer to bearish and bullish engulfing candles or trades that you can take as the big shadow. And there are stipulations behind taking those trades. It's not just every single bearish or bullish engulfing candle. So that's what I'm trying to get at, is that just because there's a bearish engulfing candle doesn't necessarily mean that price is going to drop, especially when you look at the bigger picture of, wow, we are above this wedge again. Okay, so we have some very, very clear, well-defined support, well-defined resistance. We saw a little bit of resistance actually right here when that candle retested it and closed back underneath it, but we are back above this wedge. So I wouldn't be surprised if we saw price, there is still a nice 100 pip possibility to the upside, up around to the 1250, or I'm sorry, the 113.50 level, before maybe seeing another wave to the downside. So kind of similar to USD Swiss franc, where if we see a break of resistance, look for some sort of bullish continuation pattern. But same thing with this. If we do see this resistance right here broken, then look for some sort of confirmation, maybe a retest or maybe a bull flag that forms to continue going higher and catch that breakout of the bull flag once it breaks the highs. But there's a couple different ways to trade this. But the first and foremost, before we look at how we're going to trade this or what we're going to, how we're going to get into the trade, we first want to make sure that first and foremost we have a confirmation of the break of last week's highs and the break of that resistance. That's first and foremost. And then we'll look into entering the trade. So dollar yen, potential upside on dollar yen, AUD USD, NZD USD, not a whole lot to talk about on these pairs, but AUD USD is quite interesting. I think that we could see some downside this week. This trend line, just so you guys know, I think it goes back to until 2013 and it's drawn on the daily. Yeah, so this is a pretty big trend line, guys. Oh, let me undo that. Let me lock this trend line. Let me lock that. Okay. This is a pretty significant trend line that has been capping price. We have been consolidating and kind of moving above it, moving back below it the past couple of weeks. But if we do continue, if we do break last week's lows, if we break this lows in this area, then expect some downside. Kind of looks like Euro USD a little bit, how we have that support trend line that looks very similar to Euro USD. Watch, I'll actually switch between the two. Take a good look at AUD USD, take a mental picture of AUD USD, and then look at Euro USD. They don't look too different. So and that makes sense, guys, because obviously, Euro USD usually has a pretty positive correlation to gold, which also has a positive correlation to AUD USD and NZD USD. All four of those pairs have a pretty positive correlation. And if you guys are wondering about the correlations, by the way, I did actually drop a correlations cheat sheet. I dropped it, I think, last week in the Telegram group. You can actually go inside the Telegram group and you can go into the settings and you can actually just search all of it. It says in the back office or in the settings of the Positive Traders Telegram, it does have a little shared media. So you can just click on it. It says 160 photos and you can see all the photos I've posted, all the videos I've posted in Telegram without having to scroll through all the messages. But if you don't know how to do that, just scroll through last week. You'll see I dropped a correlation cheat sheet and it shows the correlations between all of these pairs or a majority of the ones that I focus on. Very helpful if you are new to Forex and wanting to understand correlations, how one pair correlates to another. But anyways, we already talked about Euro USD, possibly expecting some downside on Euro USD. And so we're going to pretty much have the same analysis on AUD USD. We could potentially see some downside. It might come test this trend line. and then drop a little bit lower. And then as far as targets go, I mean, looking at some very simple targets to the downside, let's go ahead and just fib out this swing. Pretty easy. Kind of define a couple levels, and then we'll also see. So that's I really like seeing this 38.2%, like right there where we have our lows where it spiked down, and then it's very nice that we have this weekly resistance, which will obviously now be support when we get down there. So this is that weekly resistance. If you guys remember months ago, before we broke out of this area, this zone was kind of capping price, and then we broke out of. So it's kind of nice. It's kind of cool to see that the 50% retracement level is also with that area. So taking a trade, I'll just give you an example of a trade. This may or may not be a trade. It's probably going to be like a little bit different parameters, but something like this would be if we get some sort of let's say we see some sort of bearish continuation pattern down in this area, or up in this area, maybe having like a entry around there, stop loss above the trend line, having our target, take profit 2 down here and take profit 1 down here. But even our first take profit is going to have a good risk to reward, as you can see. That's making sure that every trade you take, or averaging out of 10 trades, that your risk to reward on your trades are a 1 to 2 risk reward. Then you don't have to focus as much as being right on every single trade, because I'll explain that at the end. So if you guys are new, if this is your first webinar, stick with me until the end. I'll explain how you guys can be successful without having to win all of your trades. Very important that you guys understand that. But it is kind of like, I call it like the sauce. It's like the secret to Forex, how you can be successful in Forex. You don't have to win all the time to be successful in Forex. And it's true. You can be successful even winning 50% of the time in Forex. I'm going to be showing you guys that at the end here. I also discuss it every week, so sorry if it's boring to some of you guys that have watched these a few times, but I think it's very valuable info. Anyways, New Zealand dollar, US dollar, I think that there's definitely some potential to the downside. This pair has been ranging for quite a while. We haven't seen this pair trending. But I do think New Zealand dollar has potential to go down to the 72 level this week, as well as, it follows AUD USD. So if we're expecting downside on AUD USD and Euro USD, then we're probably going to be expecting some downside on New Zealand dollar, US dollar as well. So there's about 80 pips to the downside as far as a first target is considered. We can even extend this trend line a little bit. If this trend line starts to, let me fix this trend line a little bit. There we go. That looks a little bit better. Hopefully this makes sense to you guys. Resistance, 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 resistance that we ended up breaking and then retesting, going, moving up higher, coming back down for another retest, moving up higher, and then ultimately falling back down to test the top side of that resistance trend line for new support. And so that could be a level somewhere around this area, could be some targets for this week. So still some room to the downside on this pair. And USD CAD. And very interesting. USD CAD is very interesting. If you guys if you're in the premium group last week, we actually were potentially looking at taking a sell. Actually, hold on. What's funny is that, let me see. Let me go to objects tree and risk reward short. So this is actually a trade that I didn't give this out in the premium group. I was about to give this out in the premium group last week. If you guys are in the premium group, you guys remember Thursday's live session. We are actually, this candle right here is Thursday's daily webinar that we did in the premium group. And if you guys are in the premium members, you guys can vouch for me. We specifically talked about having a setup like this, and literally I drew this out in the premium webinar on Thursday. We didn't take the trade just because, if you remember, last Friday, let me just revert back to Friday's market. There was some CAD news in the morning. So that's what made me not pull the trigger on the trade, was because we had some high impact CAD news in the morning. Generally, like I said on the premium webinar on Thursday, that if there was no CAD news or if there was no news for CAD coming out, no high impact news for CAD coming out, then we would have placed this trade. But I'm looking at it now. Yes. Yeah. Good call, Kevin. Bull flag. There's a bull flag on the 1 hour. Not as strong. I would definitely like to see this level on the 4 hour broken. But these two different levels that I have. But I do think that there is, I'll get to the point, I think there is upside on USD CAD potentially. If we see some strengthening on USD CAD, we see some more. Remember that USD CAD also has a negative correlation to gold. Okay, so if we're expecting a little bit more downside on gold, then we are going to be expecting potentially a little bit more upside on USD CAD. So that being said, also we can see that really, really big wick, that big exhaustion candle on USD CAD to the upside, are giving us some clues to the upside. So there's still, I think that these pullbacks that have been being made across the board, we see Euro USD dropping a little bit the past couple of weeks. We see USD CAD pulling back, going to the upside the past couple of weeks. Things like that. I think that this continuation could play out for another week or so. That's just my opinion, guys. So with that, I want you guys to hang on for 2 seconds. If you guys are new to Forex, I highly recommend just take 90 seconds and watch this, guys. It's two minutes of your life. Please watch this. If you've already seen this, you don't have to stay for this because I go over this just about every week. But if you haven't seen this, please watch this. And Sheldon, you just asked really quick, what's gold and oil correlation, negative or positive? They're going to have a positive correlation for the most part. I mean, that's a little bit different because it's two different commodities, but if gold has a negative correlation to Euro or USD CAD and USD CAD has a negative correlation to oil, then that means gold and oil are going to have a somewhat positive correlation. But like oil, the fundamentals behind fundamentals is what moves oil, okay? Like how much they are willing to give out or how much they're willing to produce. Okay, so the supply and demand. Gold's a little bit different. So be careful if you're trading the correlations between gold and oil. But anyways, let's go ahead and look at this. So let's take this. I'm on this. This should just be a blank white screen for you guys. Let's take 10 trades. So right now I'm going to show you guys, if you guys are new to Forex or you just have been introduced into Forex the past couple of weeks or months or so, and you guys have it in your head that you have to win every single trade, you feel like this is it's going to be hard to become a good trader. Here's the secret: is you do not have to be a good trader to be profitable in Forex. You just have to be consistent, and you have to be able to curb your discipline. You have to have very strong discipline of your emotions in the markets. So let's just take 10 trades, just 10 trades. That's it. Not 20 trades, not 50 trades, just 10 trades. And let's say 5 of them win and 5 of them lose. Simple, right? So half and half. That means 50% of your trades win. All right, now let's apply. This is the key, guys. Okay, this is the key right here. This is the most important part right here, is that every single trader, obviously not every single trade you take because it's hard. The markets are always changing and your trades are always changing. But the average of these 10 trades, have a 1 to 2 risk reward or better. If you guys are new to Forex, you don't know what a risk reward means. It means that if the first number is what your risk is, and the second number is what your reward is. So if you're risking 1 to make 2, right? You're risking $1 to make $2. Okay, you're always looking for a reward that averages to be double your risk, if that makes sense. So let's put this into percentage wise. So if you risk 2% of your account, okay, and you should all know how to use you shouldn't even be doing any type of live trading if you don't know how to risk a percentage of your account. If you don't know how to use the position size calculator, Google how to use a position size calculator. In the premium group, we have an educational video that's being released with the 20 lessons that is being released this week. One of them is on how to understand risk management, how to use a position size calculator to know how to risk what percentage, or there's plenty of videos on YouTube, or there's a link on our website if you're a free member as well. But anyways, let's say, so if we're risking 1 for 2, what's double 2? So 2% for 4%, okay? So using this right here, this is so key, guys. 2% for 4% or 1% for 2%. Doesn't matter. If you have an average of a 1 to 2 risk reward, then you're going to be profitable long term, as long as you can win. At least you can even win only 5 and lose 6. But anyways, if you win 5 and you have at least a 4% win, then that's a gross plus 20% gain. And if you have 5 that lose with a 2%, then that is going to be a gross negative 10% loss. Simple math, positive 20%, negative 10%, that still leaves you with a positive 10%. Now, some of you guys that are new to Forex, you might be saying, wow, 10% is nothing. That's not a whole lot. There's companies out there that advertise being able to make 100% in a month. Guys, those companies are scams. I guarantee you, if you can find a track record, show me, I'll send you $1,000 through PayPal. Like, seriously, those companies are complete scams. No company is going to give you 100% return on your money or anything, anywhere, either anywhere near close to that every single month, month over month, for year over year. You need to keep your target small. You need to have that long-term mindset to be successful long-term with Forex. So let's take this 10%, and now let's shoot back over to the browser, and let's go. Bear with me, guys. This is where it gets good. You have your compounding calculator. This just does the math for you. Let's say you take $1,000, just $1,000. That's the beauty of Forex. You don't have to have tens of thousands of dollars to make money in Forex. You can start with something as little as $500, $1,000, and still be profitable. Let's say you make that 10% a month. Okay, you average that 10% a month. Now, keep in mind, guys, okay, make sure you keep in mind that this is averaging 10% per month. So out of 12 months, you make 120% on your account. That doesn't necessarily mean 10% every single month. Obviously, it does at the end of a month. That's what it averages down to. But if you have a couple months that are 20%, maybe a month at 15%, a couple months at 8%, whereas overall, out of all of those 12 months, it adds up to 120% gain, then that breaks down to 10% per month. So you do that 10% a month, $1,000, and you do this for 5 years. Okay, 5 years. We all know somebody that's been working the same dead-end job for 5 years, getting paid the same, living paycheck to paycheck for 5 years. 5 years is nothing in terms of investing. Most people, when they look at like investing in a 401k, an IRA, something like that, some sort of long-term, quote-unquote, long-term investment, you're looking at not being able to see this type of returns for 20, 30, 40 years. So 5 years in relationship to investing is still not a long time. But you can see your $1,000 investment at 10% a month, only 10% a month. You know, what I just showed you guys, that winning 5 out of 10 trades, but keeping that good risk management, keeping that good risk reward on your trades. After 5 years, you're going to turn that $1,000 into $304,481.64. And after 10 years, this is the power of compounding. This is where you guys have to, there's a saying, guys, that most people most people overestimate what they can do in 1 to 2 years, but they underestimate what they can do in 5 to 10 years. Everybody wants to get rich in 6 months, a year, 2 years, but nobody wants to be patient for 5 or 10 years to compound, but you have to in Forex. Look at the power of compounding, guys. $1,000 at 10% a month for 10 years, just 10 years. Okay, most of you guys, I'm sure, that are watching this are between the ages of 18 and 35, or even if you're 45 years old watching this, or even if you're 50 years old watching this, you know, you're only going to be 60 in 10 years. And that's $92,709,068.82 after 10 years with $1,000 invested at 10% a month. So this is what I call like, the secret of Forex, guys. There's too many people out there online that are, just claiming to be able to flip your account. And that's why people end up losing money. People's trade copiers, auto traders end up getting blown after a month, 2 months. We've been consistently running this premium group for over a year, making sure that our clients, our members are making money. And this is what I teach you guys. I teach you guys how to properly analyze the markets, how to properly manage your risk, how to properly approach the markets so you can see these types of results down the road. And you don't have to wait 30, 40 years, having your money in a 401k, an IRA, a CD, whatever sort of investment you have. So that's it, guys. That's why I do Forex. That's why I get so excited about Forex, is because that power. And exactly, Kevin. Yeah, we aren't gamblers. We are calculated risk takers. Obviously, I mean that could be a fancy way of gambling. Obviously, we don't want to lie to ourselves. Every single time we take a trade, it is a form of a gamble, of course. But there is, as long as you're able to control your risk, that's the beauty of Forex. Is you're able to control your risk every single time. If you guys, don't know how to use things like, I'll just quickly go over. I don't have all the time in the world, guys, to go over this, because this is something you guys should definitely know. YouTube a video, but every one of you guys should have this bookmarked. It's a position size calculator. You simply put in the size of your account. I'm assuming most of you guys are starting with a couple $1,000s. Let's say you have $2,000. You put in your risk. You want to risk 2%. You put in your stop loss. Let's say you have a 35 pip stop loss and you're trading Euro USD. You click calculate. It's going to tell you what lot size to use. So this is how you can make sure that every single time you jump into a trade, you know what percentage you're risking of your account. You aren't just, if you guys are following somebody that tells you to use 0.01 lots for every $100 or 0.1 lots for every $1,000, like, guys, run away. They have no idea what they are talking about. You should never be using one set lot size for your account balance, because that doesn't make any sense, because your stop loss is going to be different every trade you take. Sometimes you'll have an 18 pip stop loss. Sometimes you'll have a 25 pip stop loss. Sometimes you'll have a 40 pip stop loss. So you're going to be losing. You aren't going to be risking the same amount every single trade you take. So just some knowledge for you guys. Banks give 2% at best. Yeah, 120%, absolutely incredible. I'd be happy with 50%. Yeah, guys, the power of compounding is crazy. So other than that, I know, sorry, this was a little bit longer. Wanted to go over a couple things with you guys. Hope you guys got some good opportunities in. Just to very, very quickly recap, watch for potential downside on Euro USD, downside on gold, downside on AUD USD and NZD USD, upside on USD JAPI, and upside on USD CAD. Other than that, if you guys have any questions, feel free to reach out to me on Facebook, Instagram, Telegram, Slack. It doesn't matter. You know, if you have any questions, reach out to me. I make sure I get a chance to reply to everybody as fast as I can. But other than that, have a great week, guys. Remember, keep that risk reward up. If you have any questions, reach out to me. But have a wonderful week, guys. Take care.